Hi guys, welcome to my channel on the share trading. Before that, I would like you to take back a little bit step. Why this needed? Okay, now there are many kinds of instruments where a person can invest. Okay, one is the FD, and there is something of there is a fixed deposit, which during the informational age people used to get into the fixed deposit because the rate of interest was quite good, 10% to 12%. Now, coming the main problem with the fixed deposit nowadays is the interest is very less. There is no risk. People think, okay, the money is there in the bank. There is no risk. But the biggest risk is the amount, what I have invested, the principal plus interest even added in the next 10 years, the value of the money is falling, mainly because of the inflation. Now let's take an example of a pizza. Okay, now I can get a pizza for 400 rupees. You can get a big pizza, medium pizza. Now after 10 years, the same value for 400 you might get off of it. So you try to understand, if you keep the 400 like that in house or in the FD, the amount of the interest whatever you are getting, that is very less. That is the reason we have to be very much savvy when you are investing. Okay, which instrument you have to go to. There is a particular pattern, okay, where it is suggested that till 30 to 40 years you can have 80% to 85% in other instruments like mutual fund, share market, and the rest 15% into FD. But as your age progresses, like 65 or something, then you have to cut down to 40-60, that is 40 share market and 60 FD. And as you grow above 70, then definitely you need to have more money in the FD than the share market, because share market is like most of the times it gets into long term. Because what's happening is this entire market business dynamics, lot of factors are coming into play when it is coming to the shares, okay, of the share market. It might be political conditions, it might be emotional conditions in the sense like something happens within the corporate where one some dispute happens within the company or there is some problem, and political, okay, influences. These influences will have impact on the share market. So people cannot say that, I will sell it for after 1 month or 15 days or something, except for the day trading, where people have to understand how it works in a day. Okay, but for the general people, okay, you have to be careful. As your age progresses, your exposure to equities or the share market should be less. But right when you are getting into this 30, 35, 40, 45 age, you have to be very careful not to put in FD, wait for long, because don't think about retirement. People are talking about early retirement I will take because I have 10 lakhs in my FD. That is not going to help, okay, because the value of 10 lakhs will be equal to the value of 1 lakh after 15 to 20 years. That is how the inflation is going. So keeping into mind, this mind, any person should have financial education. Okay, financial education is very must, because what's happening is, even if I have 10,000 rupees, it is not enough, and even if I have 1,000 rupees, it is enough. Why? The why is enough? It is not the amount or not the value of the money you are having. It is how you are going to utilize. That is where your financial education is a must. Nowadays, we are into informational age or informational era. Earlier, it was industrial era where people used to work. They used to get into good colleges, they used to study, they used to get out of the college, then they used to join a company, and then they used to say, okay, I get the PF, EF, retirement benefits, it is okay. But that is gone now because of the political conditions, because of the inflation, because of the era we are going through. Now it is called the information era. The guy who is having more information, accurate information, will be making the most of it. With that, I would like to conclude this session, and in the next session I am going to talk more and more about, okay, the fixed deposit versus share market and mutual fund. Okay, how to get into this and which class of the people should invest more on which particular asset. Okay, thanks for your time, and please like and subscribe this channel, and also share it with others, so that we as a community should be more and more strong going forward, because financial stability is the biggest stability any person would like to have. Thanks.